This is a special edition of Macro Voices with hedge fund manager Eric Townsend, the premier financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. Now, for this special edition of Macro Voices, here's hedge fund manager Eric Townsend.
Macro Voices All-Stars episode 29 was recorded on July 8th, 2019. I'm Eric Townsend. All-star Brent Johnson is back with us today. Brent, you knew this was coming. Gold. You and I have been, in the eyes of many, many people, proven completely wrong. We thought that probably that very strong resistance that existed around somewhere between 1350 and 1377 would probably hold. We thought that, if anything, gold testing that level might have even been, for the daring, a short sale opportunity. Didn't go that way. What's happened here, and is this reason to really take pause and question your overall theory about the dollar and gold?
Well, it's a very deserved question, Eric, and I've received a number of emails and direct messages and Twitter posts, pointing out how wrong I was, et cetera, et cetera. And listen, you know what? I may be proven wrong. This has been a hell of a move in gold. I mean, there's no other way to really look at it. It did break through that very significant resistance. When we spoke last month, you asked me what would I do if gold broke out and did break through that resistance, what I would do. And a month ago, I said I would not chase it. And I have not chased it. When we spoke a month ago, I told you I had bought puts at 1350. Those are obviously very far underwater. In the subsequent weeks, I bought more puts at 1400 and 1425. So the 1425s are in the money, the 1400s are at the money, and the 1350s are way out of the money. And so before I go too much further into why I did those trades, I need to stop and say again, and I say this all the time, and I know few people who have put out as much work as I have on why everybody should own gold. If there's somebody out there who's put out more work than me on why that is, then I would like to meet that person. Everybody should own gold. Now, having said that, I'm just not convinced that it's going to pay off right now. Don't get me wrong. This last couple of weeks has been a heck of a move. We jumped all the way to 1435 or 1440 even. The reason that I'm not yet convinced that this is for real is because in 2016, I said that gold was not yet ready to break out, despite the fact that everybody should own it. And I got that one right. I said it again in the spring of 2017 and again in the spring of 2018. Despite the fact that everybody needed to own it, I just said I wasn't sure it was ready to break out yet, and I didn't think it would. Now we had the exact same situation again now, and all the signals that told me that it wasn't going to break out in 2016, 17, and 18 are happening again right now. And I can go through a number of different indicators that I look at. Now, having said that, I could be wrong, right? I think we are set up now to where gold could easily go to 1,600 or 1,200 by the end of the year. And I don't say that as a joke. I'm being very serious. If this holds, and the fact that it is above resistance and it holds and it gets another monthly close above 1,400, and the Fed comes out and is extremely dovish at the next Fed meeting, and we jump up to 1,500, you could start to see a lot of players who have not previously been in gold for the last 5 years start coming in. I don't think that has happened yet. I think what has happened is everybody that has been following gold and has been praying for gold to go higher for the last 5 years has doubled down on their positions in the last, call it 6 weeks or 2 months or whatever, however you want to define that time period. And that is what has pushed the sentiment up, the price up, et cetera, et cetera. I don't think it's really drawn in a bunch of new people yet. But if it does, if it holds and it draws new people in, then gold's going to go much higher. And that's why I think everybody should own it. Again, for some reason in the gold world, people don't like the fact that I say that you should own it, but I don't think it's going to break out yet. Everybody wants me to say it's going to break out now. It's going to go to $50,000. You're all going to fly in private jets, and you're going to be proven right, and everybody else is going to be spectacularly wrong. I don't own gold for those reasons. I own gold for insurance reasons. I don't think that insurance is going to pay off yet. But you know what? It might. I'm very glad I don't have to chase gold here. I'm very glad that I already own it. And if I lose money on the hedges that I put on, then that's fine, because those hedges are insurance policy, reinsurance on my insurance, right? It's just a short-term trade that I think gold is not yet ready to break out. But, there's a lot of very smart people who disagree with me on this. I don't think if you have gold, you should be selling gold. If you own it, if you own physical gold, if you own it as a speculative trade, I think I should say congratulations to you. You made money. There's nothing wrong with taking some profits. Like I said, I just don't think the gold is going to make its major breakout yet. And part of the reason is because Eric, I am such a big dollar bull, and the dollar has not even made its move yet. When the dollar initially breaks out and makes its move, I think that is going to be a headwind for gold. Now, does that mean the gold's going back to $1,000? I don't know. Maybe it just stays here for a while before it actually, runs to all-time highs. I do think it will eventually run to all-time highs. I do think that the dollar and gold will be two of the biggest profiters from the global chaos that I think is coming from a global currency crisis that we'll see in the next couple of years. So, I think everybody should own gold, but, we've been in this position before. There's a lot of people who have all their hopes and dreams pinned on gold. And if they have staying power, I think those hopes and dreams will be realized. I just don't think it's going to be realized this year.
Well, I think we are in very, very close agreement, Brent, because as you say, I am absolutely convinced gold is the asset that you want to own in the long run here with what I see on the long-term horizon. Something I really want to mention, though, for the benefit of our listeners, because you brought it up, and I think it's so important. What I saw, and it was very telling to me, was just a huge number of emails and tweets and everything when gold was still at 1340, 1345. People were emailing me saying, Eric, you're crazy. You're not buying here. You should be buying here. This is the big move. It's on. And I'm like, wait a minute, guys. We're right up at the, if you were going to buy it because you thought it was low, that was something to do at 11.90 or something. It was not what you do when you're $10 below a major resistance level, which is held for 5 years and was likely to hold again. So it's very clear to me that there was a lot of bullish sentiment that was helping to push gold through this. Once we saw the breakout, hey, anytime you break through a level that's been there for 5 years, it's going to beget more buying. The way I'm looking at this, and I think we need to address this for the benefit of people listening, now that we've been proven at least wrong on the first round of what we thought was going to happen, how do we decide when we get to the point where we're completely wrong and we just throw in the towel versus at what point do you really say, hey, my hunch was right, this thing was a false breakout? And I know my numbers are, if we get back, let's say a weekly close or better yet a monthly close below 1377, that says to me this was a false breakout. If we go above 1440 or whatever the recent high was and stay there for at least a week, that tells me, hey, it's just time to say this thing is on. We were wrong. That's it. What do you think? Have I got the right levels? Or
yeah, I think that's very fair. Again, when we talked about this a month ago, you asked me what happens if gold goes up to 1400, Brent. What would you do? And I said, well, if it goes to 1400, I think it will at least come back and retest the breakout line of the 1360, 1370 area and test that as support. So if we were to pull back to that, I think you just said 1375, 1365, whatever. If we pull back to that area, bounce there, and then rocket back up above 1400, and like you said, get a weekly or monthly close above that, that looks like, it looks like we'll probably be wrong. Now, here's the thing to remember, though. Just because, let's pretend that gold does break out here, and let's pretend that the bear market is over, and now we're in a bull market. That does not necessarily mean that gold is going to 5,000 next year, right? We can bounce around at 1,400 for a year. We can go to 1,500 and, back and forth between 1,400 and 1,500 for a while. Now, that said, I think once we get back above 1,500, I think it goes much higher very quickly, just because I think at that level, people, everybody will start coming back into gold. The point I wanted to make, though, is, so when do we say, do we throw in the towel and admit we were wrong? Well, I'm fine admitting I was wrong right now. I mean, I don't have a problem with that because, again, I own gold. Right? I've owned gold for 10 years. I've tried to get everybody else to own gold for as long as I can remember. I just don't happen to think it's going to break out. But if it breaks out here, I'm going to be okay. Now, will I be annoyed that I didn't get the call perfectly right? Of course, I always want to be right. Who wants to be wrong? Nobody wants to be wrong, but being wrong is part of the business. I will say, though, that I'm very glad I don't have to chase gold here because, especially a week or two ago, I said I even bought a few more puts because every single thing that I looked at was at all-time highs from where it was in 2011. Daily sentiment was at its highest level since 2011. Relative strength was at its highest level since 2007. The commercial shorts have piled back on, and they're not at their all-time highs, but they're getting close. The the small speculators have piled back in, and they're near their highs. There's just so many indicators that told me that it was overbought. Now, can it become more overbought? Sure, but here's my point: is if gold runs back, let's say to 1450 or 1460, at some point it's going to have a pullback. I would rather buy on a pullback, even if it's a little bit higher than where it is today, and when it has less frothy sentiment, than to buy, now with everything at a very high sentiment. I just think even though you might have to buy at a little bit higher price, you can get in at an entry point that is much less risky. In other words, nothing has been proven yet in my point. It looks like, gold could break out here. It looks like I'm probably going to be wrong. But you know what? I might not be. The game is still going. Like I said, I'm glad I own it. I'm glad I don't have to chase it.
I really respect your professional maturity, Brent, in being so open about saying, hey, let's just admit right now that we were wrong. And you're right, we were wrong on this tactical call. The reason I'm a little bit more obsessed with this question of whether or not we were maybe a little more wrong than that is I feel like this gold move is reason for us to need to at least question, okay, could it be that we got the dollar wrong too? And is it possible that gold is telling us that the people who have been saying the dollar is topping, it's all over for the dollar, we're headed lower from here? I think, our friend Luke Groman was tactically long the dollar. He's no dummy. He saw what was going on. He's back to short the dollar last I checked. And he's saying, hey, it's topped out. It's over. Game over, guys. Now, I was not ready to believe that story, but boy, this move in gold that caught me wrong-footed and by surprise really makes me think, is there room that we just got the dollar story wrong? Have you begun to question that? And if so, what do you think?
So first of all, just to be absolutely 100% clear, I do not think that I have gotten the dollar call wrong at all. So just, if I sound wishy-washy at all after this, I want to make it absolutely clear I'm not. I think the dollar is going much, much higher. That is part of the reason why I'm not yet convinced that gold's going to have a spectacular breakout here. But, again, going back in 2016, when I kind of started putting out my research and my arguments for a stronger dollar, I said that we're going to get to a point where the dollar and gold are going to rise together. Perhaps we're already there. Again, I don't think that we're there yet. I think when the dollar initially breaks out, that will be a headwind for gold, but it might not be. We might be at the place where gold and the dollar start to rise together here. Was it 2 weeks ago now that we had the Fed meeting? I can't even remember exactly, but the dollar took a big header on Powell's comments, and everybody said, "Oh, it's over. This is, they've thrown in the towel." But you know what? It went down like 1%, and everybody said the dollar's dead. And I just, I look at the dollar. Think about this, Eric. We have a trade war, which everybody is, or not everybody, but many people have said that China has the upper hand. We have the Fed, who has completely reversed their position from 6 months ago. We have a debt ceiling that we're up against, and we have to borrow trillions more just to fund our government. The Europeans rolled out this, I don't remember the name of it, this special purpose vehicle to circumvent the dollar so that they can trade oil with Iran. You've got the president of the United States openly attacking the central bank, and you've got twin deficits. And you know what? The dollar's basically where it was a year ago. Can you think of any more things that could be bearish the dollar that we could add on top of this, and yet it hasn't fallen? So to me, that is an extremely telling sign. When it sold off a few weeks ago, it broke below this level, and everybody said, that's it. Well, you know what? Then we had that jobs number on Friday, and it jumped right back up in there. And so we're right back in the channel. And the dollar bears have thrown everything that they can at the dollar, and it is still standing, and it is still strong. And then look what's going on in Europe, for God's sakes. They just put forward Christine Lagarde to be the head of the euro. Do you think she wants a strong euro? Do you think she's going to go in there and raise rates or stop cutting? They put her in there, I think, because they know that the financial part of it is gone. In other words, the ECB is now a political institution. They have had to keep low rates and quantitative easing and extraordinary measures for a decade. Meanwhile, the U.S. raised 9 times. Now, you're going to tell me that the euro is in better shape than the United States? I just can't get there. I'm sorry. If you believe that, that's fine. That's what makes a market. But I just think that's crazy talk myself.
That brings a thought to mind, Brent, which was we have a very international audience. You and I happen to be dollar-centric investors. Our savings are in dollars, and we think in dollars. But for our listeners in Europe, was it time for them to buy gold a long time ago? Because
absolutely. I think I maybe even said, at your conference in Vancouver, I know I said it a year ago. You can go back to Twitter how many times I said it. I said, if you're not a dollar-based investor, buy until your hands bleed, because the gloves are off. We're going to have, MMT and QE and extraordinary measures. And, when the dollar goes up a lot, obviously that means that other currencies relative to the dollar go down a lot. And so if you're a non-dollar investor, if you're buying gold in Australian dollars or Canadian dollars or euros or yen, my God, yes, you should definitely own gold.
Brent, I want to come back to the good old U.S. stock market. I talked to Louis Vincent Gav about all-time highs earlier this week, and the immediate reaction I got from Louis is, hey, wait a minute. You might have the U.S. market at all-time highs. The rest of the world's stock markets are rolling over. It's really clear. And I couldn't help but think of you, because immediately what comes to mind is, I'll just be candid here, Brent, and tell all of our listeners on the air. The first time that you told me you thought the U.S. stock market was going to the moon upside from here, I thought you were just off your rocker. And now I'm looking at this and I'm saying, you know what? I can't come up with a good explanation of how we got back to all-time highs, because it doesn't jibe with my analysis of what should have happened. So clearly, I'm out of tune with things. Your off your rocker, crazy, nutso view seems to be coming true already, and it makes me want to go back and revisit it. So why don't we start with a quick refresher for any new listeners on why you think there's plenty of upside left in the U.S. stock market, and then get an update on what you think about current events and what they mean.
Sure. So long story short, I think that the United States stock market is going to go higher on a safety trade, not because things are good, not because growth is exploding, not because profits are rising, but because I think that the US and American markets will get a flow of capital from around the world as a risk-off scenario. And as that flow of capital comes into the US, I don't think it will just sit in cash. I think it will go into US assets. It'll go into US bonds. It'll go into US stocks. And I think we're going to get this spectacular blow off top in equities. Now, I understand that sounds crazy. It is crazy. I admit it. It's not, your run of the mill theory. When I look around and I think, where are people going to place capital? I mean, for God's sakes, Eric, the Greek 10-year is at the same level as the US 10-year. Greece, the bond market is just upside down. Now, listen, that doesn't mean that rates can't go lower. I mean, rates have taken a huge move down in the last month globally. The US, Europe, Japan, everywhere. And, the central banks seem bound and determined to pull them even lower. And maybe they can. But when I step back and look at the big picture on interest rates, we're at 5,000-year lows. I think that the bigger bubble is in fixed income than it is in equities. Now, that doesn't mean that the bubble in fixed income can't get bigger. I'm not saying that it's going to pop right here, but it's possible that it does, right? And then you also got to separate the U.S. from the rest of the world. I think it's very possible that the U.S. rates stay here or go even lower, but Greece and Italy and France and Spain and Japan and Australia or Canada, I think those start to rise on credit party concerns. And so going back to the equity market, these bonds versus the equity market, those are real assets. Now, people always give me a hard time when I say that. They say, no, if you want a real asset, you got to buy land or you got to buy gold. Well, that's not exactly correct, because when you buy a company, you're buying a claim on buildings, you're buying a claim on real estate, you're buying claims on property, plant, and equipment. Those are real assets. When you buy a bond, you're buying a promise. That's paper. Bonds are paper, equities are real things. And so I just feel like, when people start to lose money on paper, i.e. sovereign bonds around the world, I'm not talking about the U.S. Treasury here. I'm talking about, Italian treasuries or French treasuries or Australian treasuries or Canadian treasuries. When people start to lose money on those things, I think that the U.S. is going to get the flow of capital. And I think that is going to push the stock market higher. Now, we're kind of back at the highs here. Again, we've been in this range. At the beginning of the year, I said stocks were going to go a lot higher. They have gone a lot higher. I don't know that they're going to go a lot higher right now. I mean, we're up, 17, 18% for the year? I mean, that's a pretty good year. I'll be fine if they just stay here for the next 6 months. And they might. But once we break out of that channel to the top, which I think that we will, I think you're going to see just a spectacular move in equities. Again, not because things are good, but because they're bad.
How about quantifying how spectacular can a move get in equities because things are bad? Are we talking 4,000 on the S&P? What's the number?
I could see 4,000 on the S&P. Yeah, I mean that's only what's that, another 30% from here? Sure.
And you think that's realistic in what time frame? In the next year?
No, probably not the next year. Maybe the next 2 or 3 years. Again, I think this is all going to like bubble up, and it's going to come to a head in the next 2 or 3 years.
And what happens when it comes to a head?
I think that we're going to end up having some kind of another Plaza Accord, for lack of a better word. I think this whole thing, the dollar gets stronger in this. It's a ratchet effect. The stronger the dollar gets, the more chaos it causes elsewhere, the more capital that flows into the U.S., pushes U.S. asset prices higher, makes the dollar even more attractive. So more flows come in, and the dollar gets stronger, and it hurts everybody else, and more flows. So it's this vicious cycle, and that vicious cycle is going to have to be addressed. And I think ultimately the dollar will have to get devalued, whether it's a one-off thing or whether it's a kind of a multi-country currency board that does it in conjunction. I don't know, but I think eventually the dollar will get revalued much lower. And gold and gold might be the trade before then, but that's when gold will really, really skyrocket.
Well, Brent, I can't thank you enough for another fantastic interview. Brent, before we let you go, please tell our listeners where they can find out a little more about what you do. You're in the wealth management business, and also your Twitter handle and where they can follow your work.
Sure. Well, my contact information is at www.santiagocapital.com. It just has my address and my phone number, but I think I'm very good at responding to people that email me or call me. I'm always happy to talk to people. If it turns out that I can't help you, I'm happy to help you find somebody that can. I'm pretty active on Twitter. As many people know, Santiago AU Fund is my Twitter handle. I'm obviously happy to come on here and talk to you anytime, Eric, and talk to any of your listeners. And I know that it's a kind of a scary time, but I got to tell you, Eric, I haven't been this as excited about markets in a long time. I started to get pretty excited about a year ago, and it just keeps getting better. Doesn't mean it's going to be easy. I'm not saying that, but it's exciting.
Well, Brent, thank you so much for another fantastic interview. We look forward to getting an update from you in a couple of weeks. Meanwhile, listeners, stay tuned to your Macro Voices feed. We've got all kinds of exciting content this week. There's Inside the Investment Committee. Our monthly show is coming up this week. We've also got another episode of Energy Week, several more All-Stars appearances. We also got a few emails from people who were unable to find my video about digital currency, explaining why Facebook's Libra announcement is bad news. If you were unable to find that, it really is visible on our homepage at macrovoices.com. It's in the list just like all the other podcasts, except that it's a video, and there's a button there to play it. You can also find it at macrovoices.com/BB update for Beyond Blockchain Update. For the Macro Voices Podcast Network, I'm Eric Townsend.
That concludes this edition of Macro Voices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. Please register your free account at macrovoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to Macro Voices on iTunes to have Macro Voices automatically delivered to your mobile device each week, free of charge. Macro Voices is presented for informational and entertainment purposes only. The information presented on Macro Voices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Macro Voices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. Macro Voices, its producers, sponsors, and hosts, Eric Townsend, shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on Macro Voices.